Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at over the last 18 months exactly what's happened to the Bitcoin price and where we are and where we'll be heading over the next few weeks and months. Because currently we're in such a limbo land, we really can go either way. So we'll have a look at exactly to look at the bigger picture, how we stand today, to give us some clues as to where we may be heading. I'll also be having a look at the 60-day cycle and look at the important factors that are in play at the moment. But I'm going to be starting off with the title of the video, which is the critical signal that no one is looking at, which will be determining where we're heading and why most people are going to get caught out here. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So always please do your wider research before you make any investment decisions or even any swing trade decisions. So with that out of the way, I'm going to be talking about the critical signal that no one is looking at with Bitcoin and why most people are going to get caught out here. I'm going to take you back to the beginning of the Bitcoin. And while we didn't have the 200 simple moving average, this green line down here, what we can do is that when we actually got these figures for the 200 weekly simple moving average, that once we'd made the top for the first cycle at the November 2013, this was followed by a bear market. And what's important is that we actually came and rested on this 200 simple moving average, but we did come back and retest it multiple times over here. But it provided very strong support, and this all happened before the first peak that we reached. And we've been talking about these first peaks for quite a while now, and all this happened before the halving. But now this week I've introduced this 200 simple moving average, which is one of the most critical averages in the whole of the Bitcoin history, because historically we've always found very strong support on this line, as you can see here. So we're trying to make head or tail about exactly where we are in this box over here, having already bottomed out at the bottom of a bear market. We want to know before the next halving the kinds of things we need to look out for, and these are the critical signs. So having tested it once here, we tested it multiple times along the way before we had the next peak, before the halving over here. What happened in the second cycle is also very important. So once again here, at the end of the second cycle, we had the top at the $20,000 mark in December 2017, had the bear market, and where did we come and find support? Exactly on the 200 simple moving average. But not only that, once we got away from it, we came back and retested it one more time. And I remember at this point, there was a danger this was going to go much further. And the critical thing is that this didn't happen. Instead, we went on this big bull market run right up to the 14,000. And once again, this peak was reached before the halving. So we tested the 200 simple moving average twice before we had the peak, before the next halving. And if we bring ourselves to the current cycle, we topped out here at the 69,000. We came back, but this time was very different because we lost the 200 simple moving average over here. The main thing to remember is that once we did lose support over here, we tried to get back above it over here at this point. However, certain situations, the banking crisis and all that kind of thing, that really brought the price all the way down to the 15,400 here. And since then, so we got rejected first time, created this right shoulder with the left shoulder here and the head here. And having gone above this critical level, we've gone to the 31,000, but now we're coming back and retesting it one more time. So the question is this our second time now where we've actually bottomed out whilst we've lost the support here, but we're coming back to retest it? And will this be the catalyst for the move to the next peak, which we're expecting to be around about the $40,000 mark over here, or the $50,000 mark over here? So this is really a critical point now. We're currently at 26,800 and the 200 simple moving average is at 26,100. And we've already tested this with this candle, which was the bottom of our proposed 63-day cycle low in the 60-day cycle framework that we look at. So as you can see, this current weekly candle is absolutely critical, and we're really hovering just above this green line, the 200 simple moving average. This is the critical level. Should we lose this, then we can go all the way down to the bottom of this candle here, around about the 21.9, 22,000. And there's actually quite a few levels here, like the 25.2, obviously here, that we've been talking about. Then another one here at 24, around the 23 mark here. So there's lots of levels here, all the way down to the $18.3 mark here. So once we lose this, really anything can happen anywhere in this box over here. Okay, so having had a look at that critical signal that we've got to be aware of, I'm just going to bring you over to the current price action over here, but look at this in the context of what's happened over the last 18 months here. So what we've done is we've topped out here at the 69,000. We've come down here in the bear market that we've been looking at for the last many months now here, and bottomed out here at the $15,400 mark. And having had a look at all the various signs that told us that we've bottomed out here and that we're now in a bull market trend over here, we find ourselves at a critical juncture at this point with this current weekly candle here. And on that journey, what we've done is we've created some very critical horizontal support and resistance lines, which we go through every week in every video. And I want to just keep highlighting them because those are the things we need to keep focus on. And that is that when we came down here, we've created a left shoulder, a head, and a right shoulder. The reason why that's critical is because we left a very strong neckline over here at 25,200, and that is the next support level that we need to be looking out for over here. And when this inverse head and shoulders plays out, because in classical charting you tend to get a very good clue as to when we've bottomed out in a bear market, and that's because they leave these types of very strong patterns called the inverse head and shoulders at the bottom of the market, like here, and head and shoulders patterns at the top of a market. And these are clues that we may have topped out here and bottomed out down here. And as the market was coming up over here, we left all these important lines. So the first one was actually this 18,300. So if you go back to my videos, we've mentioned this very critical level, that once we get above this level, then that would be another confirmation for the start of the bull market. And because we'd left this marker here at 25.2, we said clearly that when the market comes back up to this point, we're going to have, with a high degree of probability, a rejection down here. So obviously that's happened here. So the question now is, are we going to use this 25.2 as a big support? Now we've already come down to as low as 25,800, so this may well constitute a fall and a support at these key levels, and only time will tell whether that's the case, or will we actually test that 25k properly, or even break down below it. And having had a look at that 200 simple moving average, which is providing support at this level here, it would appear to be that this is where we're going to be bouncing off from. So that was the bigger picture view. So where are we now here? What we've got is the long-legged doji, which I've been mentioning for the many videos now over here. And we stayed within this range all through this period. We've lost it here, but we managed to come back and recapture it. But since then, we've gone back below it. So this is where we are. We've now lost that long-legged range of price that we created over here, and we've now lost that down here. So the question is, having lost this and then retested its resistance here, having lost that over here now, will we come back and retest that 25,000? And for those people looking at this yellow line over here, this yellow trend line, if we zoom out a little bit, you'll see that this line is actually going to play a very critical role in the short term. Short term meaning in the next few weeks and maybe possibly months. So once we do get back from wherever we are in this box down here, wherever we get to, whenever we bounce up, we're going to find resistance at this yellow line. So this would be a critical point where we would expect some sort of a rejection. That could be anywhere along the line here, all the way up to about 40,000. And our narrative here is that one of the first peaks that we're going to get is that at the 40 or 50,000, if this is the 40,000 peak, then this would be reached around about July time, as you can see here. And this could well be the big point where we have a 30, 40, 50% reduction in the Bitcoin price. So if you haven't got this trend line this trend line could prove quite profitable in the future for you. And finally, having a look at the 60-day cycle, once again, we haven't found proper resolution to this 60-day cycle yet. And I mentioned in the last video that what we really need to do is that, having made a day 63 cycle low at the moment here, this is the low point so far, we really need to get above the 31 to confirm that this is the cycle low. It's not a clean cycle like we had over here and over here, where we made a right translated cycle and we made a right translated cycle over here. But the way this has behaved over here tells us that this is going to be a bit of a messy cycle, and we just need to be aware of that. And as I mentioned last week, if we break the bottom of this, then this becomes a failed cycle, in which case this candle here, the 45-day cycle low over here, comes into play. If that is the case, if we measure from this point, a 60-day cycle low here would take it to all the way to the end of June. In the last week of June, that's where it would be bottoming out. So far, what we've ended up with is a double top over here. And we really need to get above this to actually confirm this cycle bottom so that we can get back up to here. Obviously, we're going to have to expect some sort of a resistance at this point and at the $31 mark over here. But once we get above that, that would really be the move that would take us to the first peak around the $40,000, $50,000 mark. A quick look at the monthly chart, just to have a look at some sort of a strategy that anybody would be following. And I can only share with you my strategy. And as I've said many times before, I'm looking not to get shaken out by these movements along the way here, because my first port of call for the first peak, as we've mentioned many times, is to get up to around these levels here. This is the top of this candle here, which is about 40,000, and the one above here, between this range here, about the 50,000. So these are the two I'm looking at where I would be looking to actually take things off the table for a pullback that I would be expecting at these levels. And that could well be at the $40,000 mark here, or it could be at the $50,000 mark here. And just like in the previous cycles, you would expect a 30 to 50% fall anywhere in this region over here, before we get to the halving next April in 2024. Obviously, everybody's got their own financial position to look at, so everybody needs to make their own minds up. I can only share with you what my thinking is, and that is 40 and 50,000 is where I have to make a decision of to take something off the table. That could be 25%, that could be 50%, or it could even be higher than that. I will have to judge it as I go along. And it's very important to remain fluid and flexible. Never get stuck in a stubborn mindset where what you think over here, you feel obliged to do over here. Well, you don't know what's going to happen over here. So therefore, always leave yourself in a neutral position and say, well, I'll just wait until we get over here and what feels comfortable to me. And then you make the decision based on a very much an informed picture that you'll get when it's forming over here. Now, last week I did give you a swing trade possibility with Bitcoin, that there was a possibility of a 30% swing to the upside, and that was based on the day 63 being the cycle low over here. And this would be a good possibility that if we put the stop loss below this candle here on day 63, just below 25,810, so call it 25,800, a move back towards these levels here around 31,000. So your position would start over here where it currently is at around 26,800, and your risk reward would be about 3.8. So that's not a bad risk reward to take over here. However, obviously, as we mentioned, that if we get to this point here, there is literally about a 50-50 whether this comes back down to this level. But with a risk reward of 3 to 1, nearly 4 to 1, this is actually quite a good risk-reward ratio play here. Please don't take this as financial advice. I'm only giving you an opportunity for a trading position. Obviously not for long-term investors. This is just for swing traders and short-term investing. And I know from last week, one or two of you have actually taken this. So currently we're at this position here. So nothing's resolved. Hopefully it will run this up to the 31,000 for you, so you can take that 3 to 1 ratio in your favor. And if you're interested in swing trades, then on the Bitcoin Miners Club on Wednesday, so every Wednesday we have an exclusive video for the Bitcoin Miners Club where we look at the technical analysis for the Bitcoin miners, technical analysis for Bitcoin. We also look at the 60-day cycles there to have a look at how that relates to the Bitcoin miners charts. and we also look at the swing trades, possibilities and opportunities that present themselves. So those are the ones that we do on the Wednesday. And if you want to become a member for those Wednesday videos, then all you have to do is below any of my videos, you'll see the join button here or the join button here in the description below. So when you click this button, you'll get this box appearing over here. So for less than $5 a month, you get all those benefits every Wednesday on an exclusive video for all the Bitcoin Miners Club members. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.